Welcome back. Let's tee up the trading day ahead and bring in our panel. Kathryn Rooney Vera is Chief Market Strategist and Economist at StoneX. Larry McDonald is the founder of the Bear Traps Report. And Ed Mills is Washington Policy Analyst at Raymond James. It's great to have you all here. We got a lot to get through for this Friday morning. Ed Mills, I'm going to start with you. Your assessment of epic fury, what we're seeing in Iran, especially as we've had commentary from both President Trump and Israel's Netanyahu suggesting that perhaps de-escalation is in the works.
I hope that de-escalation is in the works, Morgan, but the base case right now is that this lasts longer than expected. I think most investors that I've talked to thought this was going to wrap up by the end of the month. Now it looks like it is more likely than not to go later. The reasons why I say that is that President Trump has canceled his meeting with Xi. That means it's likely to go beyond the end of this month. The Pentagon is now looking for about $200 billion from Congress. That would suggest this goes on much longer. And now we have that big question, is the United States and Israel going to continue to be aligned? Because with the gas attacks over this last couple of days, as well as comments out of both Netanyahu and Trump, this is going to be a longer-term issue. We need to make sure they are aligned if you want to have this wrapped up earlier. It goes longer if Israel wants to push it much further.
And before I get into market read-through here, you mentioned it, the $200 billion request to Congress. That's more money than we've spent in Ukraine. To put it into context, is that dead on arrival?
I'd say most likely yes, but ultimately something has to be funded. I think it's going to be very difficult to get any Democratic support, so getting it through the Senate is going to be exceptionally almost impossible. So I think that we might be looking at a second reconciliation bill. That's when we add on some other things. Is there going to be some sort of stimulus for consumers? Are there other Republican priorities? There may be last chance, especially if Republicans lose control of the House in the midterm elections, to get something done and delivered, trying to see if that could improve their odds.
Larry McDonald, you say that 2026 is increasingly looking like a replay of 2022. What do you mean by that, and how much of this is being driven by commodities like oil?
Well, right now, I mean, the coal names are absolutely exploding higher every day. Natural gas equities destroy the Mag 7. Okay, everyone's in the last decade's portfolio. Jensen, you guys, all this network does is talk about NVIDIA. The stock's gone nowhere since July. And Jensen, the pump master, has been on the air with press release after press release, tactic after tactic to try to pump up investors on artificial intelligence, but everyone's in the artificial intelligence energy trade. That's what's happening in 2026.
Okay. Kathryn, want to get your thoughts on this, especially as we do see both WTI, but particularly Brent, moving higher. And every time that happens, stocks have an inverse reaction. We're seeing yields push higher as well. The commentary from the central banks, not just the Fed this week, but ECB, BOE, BOJ, others this week was very telling. This idea of the worry about the pickup of inflation and the risks there increasing, but also on the flip side of that, demand destruction as economic growth slows down.
Yeah, I think, as Ed said, it would be great if we had a de-escalation. But even at this point, Morgan, we're expecting to see the impact of this disruption. As the IEA said, this is the most meaningful disruption in energy markets in history. So what I'm looking at, a lot of people are not. Everyone's focused on oil and energy. I'm focused on fertilizer because really a third of seaborne fertilizer passes through the strait. Why do we care about that? We care about that because we're in the planting season here in the Northern Hemisphere. So by mid-April, we're talking weeks, we're not talking months. By mid-April, the planting season in the Northern Hemisphere is lost. It's not something that can be delayed and planted later. So that means that food prices take a hit. And by my estimates, historically, there's a lag between 3 to 6 months. So I think by the end of this year, we could be seeing food prices 3 to 4 to 5% higher. So this is an impact, a stagflationary impulse that we should expect regardless. Under those circumstances, Morgan, I think it's highly unlikely that the Fed cuts at all this year.
Larry, recession risks rising here, or just too soon to tell?
Yes, I mean, credit risk, if you look at high yield from loans, the private credit problem started in the loan market. There's a lot more software there, right? But now we're spreading into triple C's and high yield. So the probability of recession That's the difference between the off-ramp of 25 versus 26. In 26, the White House is going to negotiate the off-ramp, and we're going to come into a much higher credit crisis. Watch the financials underperforming the S&P by the most probably since 2008.
You know, it's interesting, Ed Mills, because we're getting reports that we could see an AI framework unveiled as soon as today by the administration as we have these conversations about the possibility of credit crisis, AI disruption in the background, and, of course, geopolitical uncertainty more broadly, which we know AI actually dovetails into here as well. So what does that mean in terms of where that policy is headed and how that ripples out to the economy?
Yeah, I think this White House views AI as the most important national security event outside of what we've been talking with Iran, and they are getting together the U.S. AI tech stack to export to the world. They want to put it in trade deals. They want to support it with financial backing, and that is the next actual catalyst for AI from what we've been telling clients here at Raymond James.
Kathryn, want to get your thoughts on the AI trade, but also want to get your thoughts on FedEx, which last I checked was shooting 10% higher. And despite all of the uncertainty, which they are factoring in to a certain extent into their outlook, which they raised, they seem pretty, I'll say upbeat, maybe constructive is the word I should use, in terms of the global demand picture.
Absolutely, and the market is pricing in a similarly positive outcome here. The PE is around 21 times right now in the S&P 500. That's 80% above the median valuation at prior oil shocks over the past 40 years. So there's little cushion for earnings disappointment. There's a lot of downside risk here that's currently not priced in. Hedge yourself.